Hello folks, welcome back to Motivated Investing. In 2020, as the world convulsed under COVID-19 and the global economy faced its worst recession since World War II, billionaires saw their riches reach new heights. Now, some are talking to their wealth managers about how to keep a hold of and consolidate their fortunes amid the global debris of the pandemic. Others are discussing how to preempt and navigate demands from governments and the wider public to pick up their share of the recovery cost. The stock market crashed a year ago. By July or so, my portfolio was back where it was before at the beginning of the year, and now it's far higher, said Maurice Pearl, a former managing director at BlackRock who chairs Patriotic Millionaires, a group that believes the high net worth should do more to close the wealth gap. The fundamental problem is this gross inequality that's getting worse. The plans being discussed by ultra-rich range from philanthropy to shifting money and business to trust funds and relocating to other countries or states with favorable tax regimes, according to the Reuters interviews with 7 millionaires and billionaires and more than 20 advisors to the wealthy. It's quite evident that the bill is coming for everybody, said Rob Weaver, CEO at Swiss wealth manager Tideman Constantania, who said some clients were also considering selling major assets like business before tax rates rise in the United States. The election of Joe Biden as president and anticipated higher taxes for the rich have in particular triggered a sharp increase in demand from clients to set up trusts, according to the wealth managers. This would allow them to pass along money to children or other relatives under the current $11.7 million tax-free threshold per person. During his campaign, Biden proposed to return to 2009 levels when the exemption stood at $3.5 million. We saw a surge of trust created and funded in Q4 of last year, said Alwina Lowe, chief wealth strategist at Valuetainment Trust. The vast majority of our clients adopted a wait-and-see approach until the election in November, and then it just kicked up into higher gear. Extraordinarily agile. Nearly two-thirds of the world's billionaire class amassed greater fortunes in 2020, according to Forbes, with the biggest gainers reaching unprecedented levels of wealth, helped by the trillions of dollars in recovery money from the policymakers. Forbes, which tracks publicly known fortunes, estimated billionaires had gotten 20% richer in 2020 by mid-December. Many enjoyed investment opportunities off-limit to ordinary retail investors, capitalizing on market volatility with short-term derivative trades, according to Maximilian Kunkel, UBS chief investment officer for wealthy family offices. When asset prices tumbled, he said many of the bank's biggest private clients sold put options or opted for more complex trades known as risk reversals, helping them capitalize on their bet that prices would eventually rise. Some of our clients were extraordinarily agile in taking advantage of the biggest market dislocations, Kunkel added. Now, as governments globally grapple with ballooning debt and growing social unrest, billionaires know the spotlight on their wealth will get stronger, according to the interviews. Many of the wealthy are mindful of looming demands from tax authorities and are speeding up plans to pour money into trust funds for their children. Wealth strategist Jason Kane said many ultra-rich families had also sought to move other assets, including businesses, into trust funds, capitalizing on the unique situation presented by the pandemic of low interest rates and depressed valuations to make potentially windfall tax savings in years to come. Inquiries in such strategists tripled during the first 7 to 8 months of the pandemic. According to the Kane, who works for US-based wealth advisory Boston Private, 75 to 80% of the families that we talked to were convinced that was an optimistic time that they needed to do something. If you are enjoying this video, please like and subscribe. The Hamptons or Singapore. Others across the globe are also taking more elastic action by relocating to countries and areas where the tax regimes and societies are more benign of the mega rich. Henley and Partners, a global citizenship and residence advisory firm based in London, said inquiries from the high net worth individuals seeking to relocate had jumped during the pandemic. The number of calls from US-based clients surged 206% in 2020 from the prior year. For example, while calls from Brazil rose 156%, for many in emerging countries, fears the strains on public services could lead to civil unrest have prompted younger generations of wealthy families particularly to seek opportunities abroad. COVID just basically took the clothes off Emperor, and all of a sudden people started to realize our healthcare system is not strong, our social safety net is really not available, said Beatriz Sanchez, head of Latin American at Global Wealth Manager. Julius Baer. Switzerland, Luxembourg, and Singapore have become popular targets as wealthy individuals consider where they want to be based in long term, said Babak Dastmaltji, Credit Suisse's head of strategic clients in its international wealth management division. They are actually saying, look, we see the world inevitably going towards more and more transparency, and there's no point fighting a trend. Dastmaltji said, let's just find suitable jurisdictions which are transparent, open, respected, and internationally recognized and established our structures there. He said. Cindy Ostrager, tax director at the Clarified Citizens Private Wealth, said she also saw many ultra-wealthy clients moving out of New York City into their vacation gateways in the likes of the Hampton initially to escape the worst of the pandemic and subsequently staying to pay lower taxes. Moves to low-tax states, including Texas, Florida, and Washington, have also become more popular, said Christy Hansen, director of taxable research and investment consulting firm NEPC's Private Wealth Group, focus on philanthropy as countries continue to grapple with the pandemic's fallout. Economists point to a larger looming issue, the decoupling of extreme wealth from overall economic prosperity. By early March, the wealth of US billionaires had risen to $1.3 trillion, or by nearly a half since the start of the pandemic, according to the research conducted by the Institute of Policy Studies and Americans for Tax Fairness. That brings their wealth to $4.2 trillion, roughly a fifth of US economic output of 2020, and double the total wealth held by the bottom half of the 30 million population. Where at the moment you might say, after 4 years of celebrating inequality, people are saying that wasn't exactly the right answer, said Nobel laureate and Columbia University economist Joseph Stiglitz, referring to the US Trump administration reducing taxation for the rich. The pandemic has focused attention of many super-rich people on social causes, according to UBS American Head of Family Advisory and Philanthropy Services, Judy Speltoff. There's been a massive shift in the conversations we're witnessing among families in the terms of consideration of social inequity. She said the younger generation has really been pushing this topic at the board level. We see so many conversations in families really gut-checking to say, yes, we've had success. We've worked hard for this success, but let's not be blind to the world around us. And let's make sure we can step out of our bubble. For many, that means philanthropy. Speltoff's team saw a surge in clients partnering with the UBS Optimus Foundation, which channels money to cause such as action against hunger, with donations rising 74% last year versus 2019 to $168 million. Yet for UK-based millionaire Gary Stevenson, a former trader to Citibank, any plan to tackle inequity, we must include a wealth tax. We live in a situation right now where billionaires pay lower rates of tax on their income than ordinary workers, he said. But I don't think it will be enough just simply to tax their income. It needs taxes that apply on wealth. Thank you for watching. Don't forget to subscribe to the channel. See you in the next video.